Welcome back to the channel. Calling in from Corfu town here in Greece. I hope you're having an amazing day, whether you're in the winter of Australia or the summer in the Northern Hemisphere. What is happening with the FOMC meeting in a few hours' time? You know what I'm going to say here, but let's have a look at it in terms of the charts and what the investors, the smart money, is telling us in the charts today before the news happens. Let's see if we can do it with our crystal balls. So my crystal ball says that you will hit that like button and some of you won't. Probably 90% of you won't. In accordance to the numbers with the subscribers, 3 out of 10 of you haven't hit that button yet. So anyway, do those down below. That's what the crystal ball is saying. Guys, we know the FOMC meeting is coming up. What does that mean for Bitcoin right now, and how is that going to affect the cryptocurrencies, the trades that are going on? Of course, this is going to depend on the support and resistance levels. That is what we are searching for. In the last 24 hours, we have been focused on the 50% level, so 20,900, and there was the level of 21,700. So the market has since broken down from 21.7, and it looks like it's coming back to test the underside of that level. So we should all know what that means when the market comes back up to test the previous support. We hope it doesn't become resistance. So I think in the next several hours, we will see what the market is trying to do there and whether we come back down. Now, how is that going to help us? Well, the trend is down. If we're trading short, we stick with the shorts. You can see there are lower tops all the way down. We're getting lower lows and the market continues down. So we've just reached that major support level so far. So basically, if we're trading, we're sticking with the trend. This news announcement is coming up, so it's really important to have those stops in place. And personally, I don't think it's a great idea to be entering new positions when there is a high impact news announcement. Forex Factory shows us this, the little red icons here for the major news announcement. So we've looked at this on the channel before, and obviously Michael also looks at this on his channel. So that's part of the Investor Accelerator crew here. So speaking of the news announcements, we are looking for a 0.75% rate rise. So if we're looking for 0.75% and the Fed gives us 0.75%, there's no real shock there. There's no shock value to the market. So we're probably not going to be that volatile. There'll be some volatility that comes into it. There always is with these red days. These are the high impact announcements because you're going to get far more traders looking for these events to trade on. They're just trying to scalp the market in a matter of seconds or minutes. So if we get what we're expecting, not that much. If we get probably a higher interest rate rise, let's see what happens to the market. Does it fall or does it eventually, over 12, 24 hours, remain steady? That will then tell us that the buyers, the smart money, is not scared of these interest rates, the rises that is, and that we may have seen the bottom or we're very close to it. So we're within a particular trading range of these low levels. So for the S&P, which is going to be the major market here, the low is at around 3,600 points. So stick with me here. This is basically to figure out whether we're still in a bear market or if we are flipping, which takes time. It happens over the course of weeks, probably even months in this case, because the top was November. For the S&P, it was around early January, late December. This can last to the end of the year, but we might not see major drops in the price of the S&P. If we go down to 3,500 from where we are at 4,000, we're racking up somewhere around 12 to 15% to the downside, but it's already come so far down. What does that even matter now? You know, we're within a bottom range. That's what we look for. Basically, we want to buy within the bottom ranges or dollar cost average. We want to get out in the top ranges and take that chunk of profits in the middle. I know a lot of people look for a bottom price, and the main question that comes up is, where is the bottom? Is the bottom in? What is the bottom price? That's pretty much irrelevant. Just look for signals that we're starting to turn. So the signal that I'm looking for here in terms of what the market is telling me, what the smart money is doing, if the market doesn't react that strongly to worse than expected increases, so this is the side we're looking at here, this is the forecast is 2.5%. If we get 2.75, so we go up 1%, and we don't really see too much happen in terms of the price, give it some time to settle down, 12, 24 hours, then we can assume that the smart money isn't scared of higher than expected interest rate rises, which means longer term, we're probably going to see prices start to go up in the next 6 to 12 months, quite substantially, and we're possibly in the bottom of the market. It's like looking at bad news in a bear market and the price doesn't drop any further. So it's almost wearing out all of the sellers. That's what we're looking for. It doesn't matter what actually happens at that specific second that the news is announced. It's what happens over that period of time and whether we're trending at some of these lows. Now, I just removed my video because it's a little bit laggy, so apologies about any of the lagginess in the video with the audio, but nonetheless, the information is still very much important at this point. So that's what we're seeing with the bullish support level. Basically, we've bounced off our 20,900. What we're hoping for the bulls to take control is a break and a close, multiple closes above 21,700. This level has been a key area for a very long time. And the worst side to this is if we get a test to the underside of 21,700, and then a retreat, basically a correction back to 20,900, and then a break underneath 20,700. So keep an eye out for that over the course of the next 24 hours, and especially in the next few hours with the FOMC meeting and the Fed announcement with these interest rate rises. That is going to be a key level. The previous levels as well are at around 19 or 18,600 to 19,000. So I think if there's a really bad announcement, they shoot it up at 1.5%, and this market doesn't, or if there's any sort of bad announcement, if something happens that they're not expecting, something really bad, but the market still holds up above 19,000 in the case of Bitcoin, and for the S&P, which is even more important here, if it holds up above these key levels here of 3,700 points and 3,640 points, then you could pretty much be safe to say the smart money is buying in this zone. Whether the price goes a little bit lower is irrelevant. They are buying in this zone because it has not shocked the market that much for us to fall out of bed and break down past key significant levels on news announcements, which, if you listen to the media, is probably some of the biggest stuff coming up for this quarter, in quarter 3. So if there's nothing that bad in terms of price, then I'm far more inclined to think that we are trending around some of the lows. So that range could be $12,000 Bitcoin up to where we are now at 24,000, but we're within a low zone. And it's just going to take time to test these areas, for the buyers to test the upside, the sellers to test the downside, and then to see who is going to win in the macro play. So focus on those levels for Bitcoin, 20,900 and 21,700 in the short term, 19,000 in the medium term. Watch the S&P, watch what's going to happen here over the next few hours. Do we get a break and a close below 37 or 3,640 points? That is going to be not a good sign. I dare say we won't get that. However, if it happens, I'm wrong. The market is far more bearish than I was expecting. And then we work to our next level, which is around 3,500 points. Okay, so let's watch those levels. As for ETH, we're just going on a bounce of our 50% level. And in terms of trades, it looks like we're trying to come up and test the underside of around 1,500, maybe even 1,550 at the higher end. If we take our 50% tool, you can see we had a nice clean bounce off that 50%, but looking further down, around 1,272. No bounces yet, but there's still another significant support level here for Ethereum, which works out to be exactly that 50% level. It's 1,270, which is also this yellow level here. That's all of those highs. It's so interesting and amazing how the market works to these 50% levels even before they are there. This data up here was not here when these highs were put in, and now we have put in a 50% level almost dead on those previous highs. So I dare say over the coming days, Ethereum may drop back and test this 1270, 1280 level, maybe a little bit lower, but if it got into that zone, that's looking pretty solid for at least a temporary support. Video's back on, so hopefully that lag has fixed itself up. Guys, I think we are in for some good times ahead. Yes, there's going to be some bumpy rides. Investors, let's see what they're signaling. I'm going to take a stab and say that we are trending around the lows. Everything is not as bad as people are making out. Land prices are still looking good. Bitcoin still looking good, even though we can drop a little bit further. I'm not here to buy the low. I just want to buy within the range of the low. And to do that, if you're looking for an exchange, of course, Bybit, Link down there. And if you guys are in the US, there's also the link there for BitGet. But buy a bit up to $4,000 of those sign-up bonuses. So check out the links down below. Join us for the Investor Accelerator Monday mornings if you want to become a member over there. We go live weekly group calls. You can ask your questions over there as well about our entire investment portfolios and how you guys can invest as well. What my crystal ball says, like and subscribe. See you at the next video. Until then, peace out.